What's up, traders? First off, I want to start tonight's video by saying thank you guys so much for the well wishes. I really appreciate it. In tonight's video, we're going to do a little bit of a trade recap. We're going to check out Aussie dollar. We're going to discuss why I took the trade, what I was looking at when I took it, and how that trade panned out. I also will take a look at some of the markets just to basically see what's going on as we get closer and closer to Christmas. Liquidity is going to dry up, so we got to be careful. And with that, let's dive in. What's up, everybody? My name is Heath, and this is Trade Talk. So today was a little bit more of a slower day. I mean, we did have a little bit of a push on some of these markets, as you can see here on euro dollar. So we're going to discuss a little bit of that, and we're going to talk about the trade I took today in Aussie dollar. So let's go on over there and talk about that first. So here's Aussie dollar on the 8-hour chart. I have this area here marked out as a market structure. This line here is coming from the hourly chart, and the hourly chart is what I was looking at when I took the trade. Now, Aussie dollar wasn't on my watch list because I already have EURUSD and pound dollar on there and USDCAD. So I'm pretty much overweighted the dollar, and Aussie dollar is going to fall in line with the rest of the dollar pairs depending on what the dollar is doing based on Aussie strength or weakness. That's why I have Aussie yen on the chart or on my watch list, because I can get Aussie strength or weakness from that pair essentially. So basically, if you're new to Forex or crypto or anything that a currency trades against another currency, you're essentially trading strength versus weakness in those two currencies. In this case, is the Aussie stronger than the dollar? And if the Aussie is stronger than the dollar, then this currency pair will rise. If it's not, it will go down. So coming into the week, we had this big strong push down. And obviously a lot of that got faded the Monday after. I actually tried to short EURUSD yesterday, and I got stopped out because this faded move. It didn't fade the complete and entire move, but it faded a lot of it. And on EURUSD, this was the push down. It almost faded the entire move. And with today's push up, you could say that it did fade the entire move, which is understandable and expected in these types of scenarios with low liquidity. So I got stopped out. I was trying to short it in this area here, and I got stopped out. I was shorting it against this market structure here. When we came back up and failed, I got short, and then this candle stopped me out. So that's how it goes in trading, guys. Not everybody's ever going to be right 100% of the time. Not me, not nobody. My strategy keeps me on the right side of the market more times than not. I lost 1% on this trade. So starting the week, I was down 1%. I made like 2.9% total on, or after the 1% minus, I'm up 2 point something percent on the week, so to speak, basically. So let's go back and discuss this trade. So this wasn't on the watch. Aussie dollar wasn't on my watch list this morning. Gus from the chat brought it up, asked me to take a look at it. He was looking short originally at it. And I did bring up the fact that it was in an uptrend, so it would be a counter trend trade. And we like to stick to the trends, because when you're taking a scalp in the direction, you definitely want to take it in the direction of the trend, because essentially what you're trying to capture on the scalp intraday is the daily range expansion. So essentially, you're looking for a daily range expansion. And since we had such a massive expansion to the downside Sunday night, and then Monday the move was almost faded, I was telling him to be a little bit hesitant about taking it, and I would take a look at it. And once I did take a look at it, we were in this area here on this green candle right here. This is a 7 a.m. Eastern Standard Time candle, and it was roughly 7 o'clock when he asked me to take a look at it. Basically, I was watching this level here, right there. And also looking at the 8-hour, it was actually, I believe it was this area here. But let's just go back down to the hourly, because when I'm looking to take a trade intraday, I get my levels from the 8-hour charts and the daily charts. And then when I go intraday to scalp, I try to look on the hourly chart first to make sure everything's panning out on an hourly chart. So you can see this was an absolute market structure. We had a test 1, test 2, and then expansion. Okay, so basically this is corrective. You got expansion, corrective, expansion, corrective, expansion, corrective. That's how the markets move. Now, this correction here, these 3 hourly candles were a strong correction. So when you see a stronger correction, then you have to kind of be wary about it. Now, we pushed up all the way to here and actually took out the high of this candle. Not by much, just by a tad. I mean, just barely took it out, but we did take it out. And then we closed below. So on this push up here, and then when we drop back below, I got short, and then I brought it up into the chat to Gus, who had brought it up to me in the first place. Basically, what is this? No, this is not. Oh, there we go. All right, sorry about that. So basically, I said, you know, if you want to go short Aussie AU, this is be the time to do it. But this isn't me giving a signal because it's counter trend and it could be wrong. I don't give signals in the chat room. The whole chat community was put together to teach new traders as to what us longer traders, the professional traders that's been in the market longer and know what we're looking for. That's what the chat room is designed for, basically. Just to kind of give you a look-see as to what I'm looking for, what Jordan's looking for, what the other members in the chat group that's making money in the markets, what they look for, just to try to teach the newer traders. But basically, I had told him that, and then I told him, that the stop should be about 13 or 14 pips from current price is what I was talking about, and then the stop actual price as to where my stop was, which was 0.75714. Okay, so basically 75714 was just over this high here. So just a little bit over this high. You can see I'm at 75713 right here. So that's where my stop was. My entry was, let's see where my entry was. My entry was 75625. So basically right on the white line. Now that's a 5-minute chart, but I took the trade looking at the hourly chart. And my target was the low of day. And I even said that in the chat. And that's what I was targeting, low of day. It was a 30 pip move. And you can see the stop loss here. It was a total 4.6 to 1 trade. Meaning I made 4.6% if I'm risking 1% on the trade. So it's a 4.6 to 1. Now, since I did not exit the trade completely, I took off 3/4 of the position. I usually take off 2/3 of the position, but being counter trend, I decided to go ahead and take off 3/4 of the position and move the stop to break even. Now, I haven't been stopped out yet, but I will be shortly if this keeps pushing up. However, I just want to discuss this. Once this candle decided to push up and then fail back below it, I had this failure here and these 2 failures here, indicating that price was showing a little bit of difficulty getting over that level. Now these wicks are by no means indicating selling pressure. Okay, if you're looking at wick candles and you're like, oh, sellers are getting involved here, this is a long wick. Don't look at it that way. Get your market structures, your recent market structures, not market structures from 5 years ago. The markets are basically traded daily, on a daily basis. You have your London Open, your New York Open, your Asian Open, and all those closes as well. Now, the market trades 24 hours a day, but those sessions vary. So most New York traders aren't trading this market 24/7. They trade through the New York session. Now, they may leave swing trades on or whatnot, but they're not trying to scout these markets at all times of every day. That's not how it works. You have your bulk of volume comes into the markets at the open of each session. The London session for 3 hours, an hour before and 2 hours after, most volume of the day. New York session, same thing, an hour before, 2 hours after. I don't trade after 11 a.m. I do not even look for trades after 11 a.m. unless I'm trading, the FOMC or something like that, because those usually come out at 2 o'clock. And obviously there would be a ramp up in volume for that. But those are the only circumstances and scenarios where I will trade after 11 a.m. my time, which is Eastern Standard Time. So I took this trade, stop up there. Basically, if the price moves up higher than that, takes me out of the trade, I'm wrong on the trade, and it's okay to be wrong. I'm wrong, often. I mean, the goal of this is not to make 100% winning trades. The goal is to make more winning trades than losing trades, or win more money than you lose when you're wrong. So you can have a 50% strategy, win one, lose one, win one, lose one, etc., etc. As long as you're losing less than you're winning, overall you will be profitable. So these are things this is why we preach risk management is so crucial. It's vital. In order to get consistent, you have to take the same trades with the same rules, using the same risk level every single time. That way you can get a baseline for your strategy and have testable data that's not changing all the time. You don't want to take trades based on emotion. You take trades based on a system. Once that system's in place, then you can test the data once you have 6 months to a year worth and see if your system is making money. If not, then you tweak it. You don't tweak it until then, because you might be making money in the wrong, or you might have a profitable strategy just trying to trade it in the wrong market conditions. Anyways, that was a little bit of a rant, and I apologize. But moving forward, so I took that trade. Obviously, this area here was the low of day. When we got that, I moved my stop to break even. And once we got down there, we basically traded in a range. Now, these aren't all, this is an inside candle of this candle, and then this is a trend candle, just because it closed higher than the previous candle. It did not make a high, and this candle is technically still an inside candle of this candle. This candle broke out, but there was no follow through. So basically, you're inside of a range, okay? You go on a 4-hour chart, and you'll see what I'm talking about. Well, no, you can't, but this is your inside those 4 hours that I was just showing you. This is that range, okay? And this is an inside range of this candle. So far, we have taken out the high of this candle, so we will see what happens. But this is why I take off 2/3 of my position, or 3/4 of it, because if the market decides to reverse at that level and come back, I still took profits out of the market, and if it decides to trend, I'll take that too. So that's just a little bit as to what I was looking at. The rest of the week is probably going to, I expect choppiness and range bound activity, because like I said, there's less liquidity in the markets due to the holiday season. But moving forward, let's just go ahead and take a quick look at everything. EURUSD had a stronger push down, and so far we have closed an 8-hour candle below this market structure here. Okay, boom, right there. And we are now testing this area. So if you get another 8-hour closure below that, we're probably going to test this market structure low down here again. And if you get below that, your next area to look for some support is going to be 21395. This area here, right here. Okay, and this line that you're looking for, if you get a test and failure back at 21914, look for price to move back down to 21548. It may not even go back up there and test. This may have been considered the test. It is pretty close. So some people front run these things. That's why you don't get full, steady, solid tests. Aussie yen is basically, it had a push down, but it's basically trading inside of this candle. Like, this candle did break below it just a little bit, but it closed back within the body of this candle. So all three of these candles, you can go ahead and say, are inside of this candle right here. So this is going to be your market structure to get a close below or a close above on an 8-hour basis. You get that, The high side of that range is 78.395. You get a closure above that, you're probably going to test 78.743. If you fail at here, you're probably coming back down to test 77.870. Why does the market do that? It's called price discovery. It's looking for buyers and sellers. That's why markets move like that. Markets go to where the orders are, and then, the algorithms and everything fire up off of base of what the market's doing, which is why I don't really trust so much on support levels that are 5 years old, because the market isn't looking at what happened 5 years ago. The market is looking at what orders are coming in right now. Right now. How many buy orders are there? How many sell orders are there? What prices are those? That's what the market is sussing out. It's not sussing out a support from 5 years ago. It's sussing out the market orders and limit orders and dark pool orders that are coming into the market at this specific time, at this specific price. That's what moves the market. That's how the market moves. So those levels do offer up areas where there will be more orders, obviously, because retail will use those orders to sell or buy at. And the market will most of the time go test those areas, and then wherever the more orders are, obviously that's the direction price goes. Once all those orders get processed, it leaves a vacuum in price. You have expansions of ranges. Those are what we're aiming for, range expansion. If you're trying to trade this short right now, you're getting smoked or you're getting chopped up. I mean, you want to take your trades at these levels, guys, not inside of them. If you take a short now, you're probably going to get stopped out, because there's a higher probability that price is going to test up here or down here than there is not testing the middle of the range. This is the middle of the range, so you don't want to take trades there. So you wait for closures to dictate direction to you. You get an hourly closure up here, a couple hourly closures up here. There's a probably good chance that 8 hour is going to close up there. If you get that, like I said, 78.743. If you can't close above 78.395, however, look for 77.870 to come into play. You get an 8 hour closure below that. Your next market structure area to look for price to react to is going to be 77.589. Now, technically, I don't have to use this because we have a wick down already. So we do have a market structure here. And just to prove it, I'll go into an hourly time frame and show you. So instead of using that area, way over there, that old price, you could just simply move that line right here and use this as your next market structure area for price to close below to prove something to you. Now, once again, this isn't 100%. This could be a bear trap, meaning close below and then instantly reject. So it doesn't give you 100% direction. It just gives you more data for you to process the information to take a trade. Pound dollar. Pound dollar is, range bound, stuck in this candle right here. This green up close candle is got price trapped. So this is your market structure high, which is at 1.34627 right here. Next low side market structure to breach and close below is 1.33160. If you get a breach below that, let's go to a smaller time frame and see if we can find a closer market structure. We have one right here. If you get a breach below 1.33160, look for 1.32194. Close above 1.34627 on an 8 hour closing basis. Look for 1.35233 to come into play. You can get these levels on an hourly chart. I suggest you get them on a bigger time frame and only go down to the smaller time frame when you have a massively long wick like that. So that way you don't have to use old price structure levels. You can use the most current and most relevant areas, because those are going to be those levels. New Zealand yen was trapped inside of this candle right here. So your area to look is going to be the low side of the range. You want to see an 8 hour closure below 72.846. The high side of the range is going to be 73.386. So you close above 73.169, which is this market structure here. Let me give you that real number. 73.136. You get an 8-hour closure above that. Look for 73.386 to come into play. And vice versa for the downside. So moving on. S&P 500. Everything is stuck inside of this bearish candle. This big bearish candle. Everything is stuck inside of it. So let's fix this. Here we go. Boom. Market structure to watch before you trade. These areas here. 3701.70. You need an 8-hour closure above that. Excuse me. If you get that, look for this area up here at 3728.80. If you keep closing 8-hour candles below 3701.70, look for 3660.90. Okay? 3660.90. Get an 8-hour closure below that, you're going lower. Tesla is this thing is so crazy, man. I mean, I took a short on it the other day and I made money, but then it immediately reversed and everything is just crazy. I mean, it's in price discovery currently. So basically we have intraday levels of 664.51, and then your lower side of that is going to be 620.87. You get it hourly, not an 8 hourly on this. These are hourly structures, intraday price action for tomorrow. You get an hourly closure below 620.87. You can look lower, possibly to 613.53, and then 604.06. To the high side at 664.51, you close an hourly candle above that. Obviously, you're going to test a possible 676.04 and then all-time high. USDCAD basically is trading in the range. It took out all those market structures. We now have a high market structure here. You can see that we're trading within this candle here, and then we broke out, closed above, and then pushed higher. Came back down. We haven't fully given this market structure at 1.28822 a test. So if you do get that and an 8-hour closure above, you can look for, at the very least, this high, which is at 1.29328. You close back below 1.28822. You can look for 1.28582 to come into play, and then ultimately this low down here at 1.28190. Gold. And I'm about to wrap this video up, guys. It's a lot longer than I wanted it to be already. So silver is testing this trend line once again. Currently closing 8-hour candle below this old market structure. So let's just go up here and put it there and say we want to see a failure there if you're bearish. And then obviously it closed below this trend line. If you don't get that, you're possibly heading higher. If you do get that, you can look for this area to be tested again at 24.61. This area in the middle of this range, which is this market structure low right here, is 25.71. And this is just the high side. This is going to be a range right here that's, price is probably ultimately going to fight with, because you have this market structure here right there. So that's 26.04. If you do get an 8-hour closure above 26.04, you can look for 27.09. And gold. Finally, gold. Gold is tested its trend line and rejected. So far, we are moving down to test this area. Back to test it. Why? Well, we pushed up and closed an 8-hour below. We traded within a range, tested it again. Boom, range expansion. Now we are currently testing that range expansion to see if there are more buyers down here or if the selling pressure is stronger. Basically, I think it adds up more to the aggressiveness of the sellers and the aggressiveness of the buyers more so than more buyers or sellers. So as of right now, when this range expansion was made, the sellers were obviously the more aggressive. So basically, you're going to look for this area here. The highest you want to see this go, if you're still bearish, this is 1876.11. If you close an 8-hour candle above that, then I would no longer be looking to short this. If you close an 8-hour below 1876.116, you can target 1855.53. If you do close above that, ultimately look for 1906.809. So that's all I got for you guys tonight. I'll just go ahead and say thanks for watching. Thanks for all the well wishes, guys. I really, really, really appreciate it about that. I mean, it really shows how much you guys love what I'm doing, and I appreciate that because I didn't think anybody would, to be honest with you. So I'll keep putting them out. If you keep liking them, keep subscribing, do all that stuff, and I'll do this. So you guys have a great night. We'll talk to you tomorrow.